Yeah,
And
for
the youth
sure.
feel like they don't have any place to turn. And if it was my daughter, I would want somebody in her community to be picked up.
Oh,
So I'm gonna try this.
sorry.
Hmm. Again, I haven't done anything like this in a long time. Opening my home and giving away my space and my energy,
That's
because
hard.
it doesn't always turn out
Yeah.
favorable. But in this case, she's a young lady who can fend for herself. So I can just hopefully help with her mindset and help her to be grounded and make better choices. And
Yeah.
hopefully through prayer, we can get her and her family healed.
But yeah, it's a
Hey,
lot.
Peace, Queen.
how you feeling?
Huh?
Are we recording?
Just a sec.
Mhm.
I'm gonna go check on the baby. I'll be right back.
Oh yeah, that's a notification you got because you follow my thing. But yeah, I'm doing amazing. Yourself?
I am wonderful.
Good, good, good.
I'm a little redder than I was the other day because I got out early yesterday and today. Look at that. Look at that. No oil, nothing. This is nature. I'm loving it. Do I look 52? You can tell the truth.
No, your skin's real nice.
Ain't God good?
Or that sun. I was just I'll be looking at my kids because some of them are lighter and they're getting burnt out there. That sun is crazy right now.
Be careful.
Yeah. So I try not to even allow them to be out there too long. Probably like it's too hot. They want to play, but it's way too hot. It's 100 degrees out here. This
It's
weather
gonna
is
be
different.
101 down here tomorrow.
It was 101 yesterday. Half
I'm
full.
going to grill my food at 6:30 in the morning, and then I'm gonna bring it inside. And when I'm ready to do anything, I'm gonna take a plate straight poolside, and that's it.
Just relax.
Mm-hmm.
All right. Peace and blessings, everybody. Peace and blessings.
What's good, everybody? What's good, my brother?
Poolside,
Peace, King.
and that's it.
Just relax.
Mm-hmm.
All right. I got we're already live on YouTube. I did
I'm
it
right around.
when I was having a conversation. Golly. So how you feeling, everybody? Peace and blessings. YouTube, how we feeling? I gotta check to see who even on there. All right, Rams, Peace King. Again.
But,
Levine, Peace Queen. Talisha, Peace Queen. Sunny, Peace King. Ash, Peace Queen. DC, Peace King. Denise, Peace Queen. Mozart, Peace and Blessings. Sunshine, Peace Queen. KT, Peace King. Lakia, Peace Queen. Charlotte, Peace Queen. And Peace King. Again. Levine,
YouTube.
Peace Queen. Talisha, Peace Queens. All right. Let's check the comments and then we'll start off. Blessings and Pat Peace King. Word. All right, so who want to start off? Rams.
oh, I got it. Yeah, I'll start it off. Um,
No
let me just
prayer.
look at it. Oh, yeah, yeah, yeah.
So,
He can't start without that.
oh yeah, yeah. Thank you, thank you. Um,
You already know.
and it was macro anyway. First, I was just trying to pass that thing off.
Mhm.
AV Peace King. All right,
Peace, family.
peace and blessings. How you feeling?
Top of the line, top.
All right, all right. In the name of Allah, the most beneficent, the most merciful, praise be to Allah, Lord of the worlds, the most beneficent, the most merciful. On the day of judgment, Thee alone we worship, Thee alone was asked for help. Show us the straight path, the path of those whom thou hast favored, not the path of those who earn thine anger, nor of those who go astray. And in Arabic, we say, Bismillah ar-Rahman ar-Rahim, Alhamdulillah Rabbil Alameen, ar-Rahman ar-Rahim, Malik Yawmiddin, Iyyaka na'budu wa iyyaka nasta'in, Ihdina as-sirata mustaqim, Sirata alladhina an'amta alayhim, ghayril maghdubi alayhim waladdallin. Ameen. I greet everybody in the words of peace be upon you, and in Arabic we say Assalamu alaikum. I feel really good, really good. I'm a little tired though. I ain't gonna lie. Yeah, you see, you ain't even hear that. I gotta like get myself up. I've been doing so much today, and that sun fried me. It killed my energy. All right. So the first segment is macro. What type of environment are we trading in? So Rams, I hit you first. I don't know if you want me to go first, and then
Don't matter. However you feeling, King.
if you ready, go ahead, bro.
Go ahead.
I'm trying to cool off anyway.
Yeah, my brother. I got it. Give me a little bit of power right there to share. All right, so um this week we had a pretty busy week, even though it was a short week. We were expecting price action. We talked about it the previous week. And now we are rolling into the third Q3 phase. So we got the new money rolling in, and let me just share my screen and we'll take a look at a couple of things. All right, so bang. So next week, first and foremost, what we're watching for Monday, right off the gate, we got ISM PMI services. So this is going to be very important. As you can see, the rest of the week is pretty light. We got unemployment on Thursday, Wednesday, FOMC minutes. Now we're expecting a no, everything's gonna stay the same, no change, right? That's fine. Everybody already agrees here. Now this is gonna be very important. Everybody's gonna be watching this number. This number is gonna represent it's a leading indicator to the broader economy. So everybody is going to be tracking this. This is going to be a gauge to the market trend and potential inflation. So we're going to see what the future business conditions look like from the services PMI on Monday. So this is going to be off the gate at 9, right before market open, right here. Bang, they're going to hit us with it. So we're gonna be ready for that. We're gonna see what happens. These numbers that came out this week wasn't bad. The NFP number, if it was way too high, that could have caused problems. So something good could be bad. So now this number is the next line in the sand we're going to be watching for. And as we mentioned, just to look at the Fed watch, we're expecting, like we said, no change. So, and like we've been saying, as the further we get through the year, the probabilities of a hike start getting higher and higher. We've been waiting for this. We've been watching this. We've been watching the chatter develop since before it even started. But this is what snipers are about. Now, let's see. Market overview. Let's go in the charts real quick and let's see what we've been seeing so far with the major indices. And before I even do that, let's take a look here and let's see. Okay, so like we can see here, ending the month and starting the month, we sold off of our major risk players and rotated. Money has been slowly rotating. Now, what I am watching personally and where the money is going, and I like, which we have been mentioning, I've been seeing Ab mentioning already healthcare. So his scope is already on the right side. He's been letting you guys know since way beforehand. And now I'm watching as well. We're watching healthcare. I am watching financials. And I am watching aerospace and defense. As you can tell, okay, and this is for I'm speaking in the group because we just witnessed. We caught the the bare bottom. We caught the switch right when the new money poured in. Where is that, Rams? That is in where I can't find it. Should be right here somewhere. There it goes. So y'all seen the way this moved this week. If you were keeping your eyes on this, y'all seen the way this moved this week. Y'all seen the way this moved this week. So y'all clearly seen the money go. Another thing I was watching was I just caught it a little too late in the healthcare sector. And this is when I noticed right where the money was going and fleeing very, very fast. Show you. And don't worry about it. There's no potential play in here right now. I missed it. So, and you guys know how I do out of chase. But that was my two. That was my ring side right there. And we broke that 397 and it was over from there. That would have been amazing, amazing to capitalize on that move. So I saw the way big money poured in here and we just went. So I see where the money is starting to rotate for Q3. Let's see how the first 2 weeks, like we mapped out last week, the first 2 weeks of July treat us. We'll see the money rotating. We'll see everything start to settle down. The last week of July will be a concern, in my opinion. We're going to watch the new month coming in, and that's when we start to set our traps, our bull traps. And we're going to start coming into August, September. So we want to be ready for this. It doesn't mean you have to be trading all along the way through it. If you only trade tech, wait until tech is back on the seat. If you only trade certain sectors, you wait until is that sector's turn to rotate. Right now, don't try to, oh, I gotta be in this, I gotta be in this. This is how you burn capital. And initial capital always and always will be the most important thing. Now, let's take a look at SPY. Let's see what we got cooking. We're gonna broadly just look at SPY, QQQ, and IWM just to see where we stand. And with SPY, I mean, last week we reached top of the range, and you can see right here, clean, just clean, the way it just rejected here. Boom, right at the top of the range. And then we had to ease off. Now, I'm going to ask the group. So, guys, watch the chat if they don't want to answer in the voice. Can somebody tell me what this pattern is called? We went over it in the group, and we went over it on lives. I'll wait a couple seconds. So I can't see the chat or anything.
Pat called it out.
Diamond top.
Yeah.
There you go. There you go. So now, what I will say is this. The last time this happened, diamond top pattern. Now, the last time this happened,
Diamond.
Yep, diamond top pattern. And it's top because it's at the top of a run, right? So if these are most effective, like don't look at it in the middle of a consolidation phase and there's no actual high point or low point. These work out best. They don't always have to work. This can easily break to the upside and fake you out and then drop, right? So, but This is what this represents. These start to develop in an accumulation phase at a supply zone at the very top. This is the beginning of a distribution campaign starting off, and then kicks off, right? Stage stage one, two, three, four, and then we do it all over again, right? So everything comes in together. Everything blends in together. Like Alicia has said many, many times, we have different jargon for different things. At the end of the day, when it is all said and done, it's all the same thing. And a cup and handle turns into a flag, right? So all the patterns at one point or another, they will blend in. You'll see a symmetrical triangle, but when you look at it, it looks like a cup and handle. Then that turns into the flag, and everything just it's one piggyback after the next, right? Guys, hold me back, real fast. I gotta take this call. Like, this is very important.
Yeah, go ahead.
Just give me like 2 minutes. I apologize, guys, very, very much.
Okay. Ab, I can share one more perspective on
Hello?
SPY while Rams takes
Yes,
his
sir.
call. Like he said, it's all the same thing. I was looking at this with a couple of girls last night and realized another potential pattern playing out. Let me share my screen. Let me just get there in 1 second. Let's see. Okay, my chart is going to be messy for a minute.
Okay, I'm back.
Bear with
Sorry.
me. Okay,
Go ahead,
1
please. I didn't
second,
mean to cut you off.
Rams. I was going to share just one more perspective and then I'll turn it back
Mhm.
over to you. I thought you'd be longer. That was not even 2 minutes.
Yeah, that was
Actually,
just
go ahead,
something
finish, and I'll come
because-
in later.
You
Go
sure?
ahead. That was way quicker than I thought.
Okay.
Yeah, go ahead.
Am I still sharing? Do you guys still see my stuff? Okay. Okay, so like we were saying, history doesn't always repeat, but it rhymes. I don't think we were saying precisely that, but that's where I was going anyway. Now, here we have a massive run, massive run, as you can see. And we have another big, massive supply zone developing. What would be the next probability here? Do you just want to rip off the top and blow it off and keep going? Possibly. It can happen. The market can do whatever it wants. And a top of the range for this July month is at 763, right? So you see this big box and then you see the smaller box. This is a monthly and then this is a weekly. So I will be able to fit 4 weeklies in here and see the pattern for the broader month for SPY anyway. Now, we have this diamond top. What is the probability of what can happen here? There's a high chance that we can start testing this bottom end. We can fake out, bang, and just go. And this can take us all the way. This structure, and I mean, if things get heavy, I've been waiting. I know a couple of us have been waiting for these numbers here. It can happen. This is all perfect structure. Perfect. Now, we're gonna have to watch how this pattern is going to develop. Maybe Monday can set it off. Either direction. Chances are, last time this pattern came into play, this is what happened, right? If this pattern is developed in the very bottom, it usually breaks to the top side, right? So this probability can happen, but we are at a major supply zone after a major run. So now this, at some point or another, needs to take a breath. The drop could be vicious once you lose 724 clean. I don't mean a liquidity sweep like what we witnessed last week. Once we lose that level on a nice candle close, the drop can get very nasty. Very nasty. Once we close at this level, this becomes your range. This becomes the new high probable watch to maintain a floor. Does that stay as a floor or do we break it? Because now we have lower levels here for structure, right? So this right here, right at this 696, and I know that's the price. So that's what I'm looking at. So 696 to $700. We're gonna be watching like a hawk when we get down there. We must hold. We must hold. Um, let's go to QQQ. Let's take a look just real fast. Now, this is all between what happened this week and what we're watching for next week. Because look, even QQQ, it's showing you the same, the same thing right there. It's right there, and we cannot ignore it. You can't ignore this. This can still look. It doesn't have to be perfect. It can go. It can go. Bull trap, and then boom, develops because it's there. The sign is there. They can always come. Grab that liquidity. Grab that wick right here. Go. Now you have this major, major floor to watch for if that is the case. Once we break there, elevator down, 664. There'll be some tall bulls. They're not strong. They're not strong. Once we break this, that's conviction enough to take this apart and come check this structure. This structure. Same deal. QQQ and SPY move fairly the same. One pulls the other. Same deal. So that's what we're watching for there. IWM, in my opinion, IWM looks pretty good. It's holding structure. I mean, I can't ignore what the chart is telling me. Holding structure, made it slow, higher low, failed to break this low. I mean, can we come for this high now? Possible. If we can reclaim, go. This has the most potential in my eyes. This has been perfect structure. It failed to break. It held. What is the next probable move? Whether whether it wants to fail to break the high, but this got a chance of upside right now because it could make another. If this is your high, makes a higher low, then comes to check this structure. Once we break there, now we watch this low, then this low. Now there's a chance of a nice trip down. Till that happens, I think IWM looks fails to break. What do you want to call it? Double bottom? Go. So that is what I'm watching as far as the major indices for next week. Let's see how this structure maintains. And SPY and QQQ for the shorter term, the next month and a half, I'd be careful in what type of moves I make. I'm not saying you can't capitalize to a little bit of upside, but entries will matter here, especially if you're day trading. Be careful. Be careful. You don't want to get caught in a nice little bull trap at the very top, and then patterns start to develop. That is all I got for that. You guys can take the wheel.
Talisha, you might as well. You wanted to add to the diamond top.
Yeah, just a different perspective because I hadn't learned diamond tops before Rams. So I was reviewing this yesterday with a couple of ladies and screen here. a different perspective of the same story. Can you all see my trading view?
Yeah.
Okay. So let me hide some of this. Oops. Let me hide some of this stuff. Good. So when I was looking at this, I noticed we were forming a series of higher lows, right? So a nice trend there. And I noticed we were doing the same thing out here. So I was actually out on the weekly at first, and it gets clearer, right? Where you can see it looks like we're starting to flag a little bit, but from a flag standpoint, we got to make the flag, right? So even though that's a bullish pattern, we got to make the flag. And what it looked like to me is that we had stayed, I'm gonna go to the 4 hour, we had pretty much stayed in this channel since June, well, the beginning of the month, right? We've been, and really you could go back here. We've kind of stayed in this channel since May. And on Friday, yesterday, the short weeks throw me off. Yesterday, we pierced the top of this channel, right? And so, again, similar story, same storyline of what Ram shared, just a different perspective of the probability of considering we broke this channel and could not reclaim a higher high. The probability now becomes, can we break 740 and hold it? And then just watching these channels. But it looks like if you just follow what history has done, we're going to go back and retest the bottom part of this channel and maybe even a little bit lower. From an ICT standpoint, this looks like what they call a unicorn model, which is basically a fancy way of saying you have a bunch of confluences in the same spot. And so you have this optimal trade entry around this 667. I'm not suggesting we're going to get back there. Anywhere in this yellow area would suffice. You also have this break in structure that normally gets retested right here when we broke this weekly structure back in April. And then you have a fair value gap in here as well that are all just strong magnets for liquidity. And all of this aligns to that 697 area. I've had 697 on my radar since the beginning of the year, once we broke the structure. I should say since 1Q, but it all aligns with that same story. So just wanted to share us another perspective of, you know, what we always say, it's all the same thing. If you're not comfortable with diamond tops, don't get caught up in that. If you're not comfortable with flags, don't get caught up in that. If you're not comfortable in whatever pattern or whatever terminology, it doesn't matter. What matters is reading what price is telling you. And right now it's telling us that it doesn't want to go much higher than 750-ish right now. That's what price is telling us because it's tried a few times and can't hold it, right? So price is saying, I don't want to go much higher than this right now. And because we keep sweeping the highs and then pushing lower, it keeps telling us it wants buy side liquidity and then it's going to seek sell side liquidity at the bottom. So we already swept buy side with this this sweep here. We swept prior month high. Make this a different color. We swept prior month high, and now we're likely going to seek sell side liquidity, which is what we've been doing since May, right? And so even if we do all of this, and this is where just keeping the context aligned makes sense, because we could still do all of this and still be in a bullish, you know, still be in bullish price action, higher time frame until we start closing below and breaking structure to the downside, right? So on a weekly level, we have to come all the way down below like 629 before this weekly trend changes, right? So just because we start coming down here doesn't mean that we're not bullish longer term, right? So we can literally do some of this, get, you know, obviously trapping people both directions and then rally towards the end of the year. But that's all I wanted to share. Just another perspective to share. It's all the same. Don't get caught up in the terminology. What matters is what price is telling us, and price is usually pretty clear on what it wants to do if we just zoom out and pay attention.
Mm. That was good, G. That was really good.
Thank you. Any questions? I can't see the chat right now, but if there's questions for Rams or I, or if not, Abby, you can take it. Oh, there's the chat. Same house, different roads. Exactly.
Banger, good looks.
So Mo Peace King, hustle up and buy Peace King. Deshaun Peace King. I see you YouTube. So this live is going to be amazing. I like. I see exactly what everybody else been talking about since yesterday with the diamond top, but I'm on a whole different. I don't see a drop. I'm going to show you why I don't see a drop. So I'm gonna pull up my chart, and I'm going to get into the diamond top pattern as well, and why. And I could be wrong. This is my opinion, but I don't think it's a diamond top though. And I'm gonna tell you why. So I'm gonna pull up my screen. All right. Jordan Peace King, Alex Peace King, Trina Peace Queen.
Where are you seeing these people?
On YouTube.
Oh,
YouTube and Zoom. That was just Zoom just now. Lakia, I'm not
oh
sure.
yeah.
I feel like I said Peace Queen or Peace Queen. But yeah, YouTube. I want. Where are you seeing these people? YouTube. All right. I see the pattern. I see it, but look. So this we could look at ES. We could look at SPY. Bitcoin. I see the same thing happening. I think so. I don't think I know institutions are back for July. They took their foot off the gas with this drop that we've been experiencing since what late May, early June. So early June, but that whole time they wasn't really. You could when they was rotating out, they was collecting their capital. They was sitting on cash. I could tell that they just came back into the market by just looking at just simple commodities. So it's not even just Bitcoin, it's gold, silver. You could see the floor is setting up on a lot of them. And then if you start looking at your flows, you'll see the Mag 7 start a lot. You'll start seeing a lot of big money for like leaps and stuff. That's not just a coincidental thing. This sweep that we see down here, so if you look at it, the shape like Rams had, the pattern it is a diamond top pattern. You can see it's a straight diamond, but again, I've been stepping away from patterns, but I do like patterns. But the diamond top is extremely rare. So, but if it does play out exactly what Rams said, that should send you to 698 fast if it does play out. So this the way they're setting this up is it's so amazing. And then the last few minutes of yesterday's closing, it told me everything I need to know. It was a classic trap. So this right here, when we ran down here, this is a liquidity hunt right down here. But let me go to ES. Back to ES. My bad. This overall the economy I want to look at. I want to look at larger than just SPY. So when you come down here,
Money market. I mean, the high yield savings.
mutual. So when you come down to $7,258 level, like 25 cents, that flush it happened here, and you could just see the clean higher lows setting up. So when they came back down and swept the $7,548 level, you see how we're just holding above here. This is if the bearish reversal pattern was valid, the price would be getting rejected instantly and heavy. Like you will get multiple wicks and a slow grind up. This big candle right here, you did not reject any of the upper uh extensions, none of the upper levels. So this is like we just made a floor right here, just like how we did over here. We made a floor again. These two candles, they bounced at the exact same spot. That tells me a lot. So when the market compresses and it sweeps the lower range and then breaks out to the upside out of like consolidation, that's what you're seeing here is a accumulation pattern. It's not a top. This is what they call a standard institutional reaccumulation phase designed to trap late shorts, but it looks like a diamond top though. But I could be wrong again. But then it's just so many things that back it up. You reclaim your moving averages, your short-term moving averages. Nothing about this chart says bearish right now at all. The only thing that you will see is the wicks up here, but when you come down to the bottom, you got all this structure down here. You're getting wicks down here too. It's setting it up, and you got a beautiful high and low that just formed, and now you're building your new floor so you could push up right now. This is so that's two factors and then I went and I'm really big on moving averages. If I look at my weekly, my daily, none of them are weak right now. My moving averages on the daily are setting up, showing me that this is support. Your floor right here, you got a bunch of support down here, I'll just say. And then if I come to my weekly, look at my 10-day moving average. My 10-day moving average came down. It was rising up, but it came down. So price, like I said, price could deviate from the moving averages. Eventually has to come back to reality. It came back down. So you see it come back down, but sellers, if this was a true setup for sellers, this would have came all the way down here and retested that area. They couldn't even get it. They couldn't flush it down there. That 720 area will not break at all. And then you come back up here, but you see how you wicked out here these past 2 weeks. At the last minute, the last like half an hour, buyers swept the area and then closed back above this area right here. So now we got even more room to go up. And then we know overall it's hard to fight numbers. It's a 91% historical win probability for a market squeeze. So, and we see institutions are actively putting their mid-year capital in instantly. Last week, we seen how we started squeezing. It's not coincidental. Start checking. We already see he brought up XL, the healthcare sector. You seen that rotation. That's fresh capital getting put into the market. That's not capital getting sucked out. It's not going to be able to drop like that if you got institutions still coming in and now looking to buy assets. So the market makers are going to be caught in this. It's basically a gamma trap now. They're going to be forced to buy into this strength to maintain their hedge, driving the price straight through any type of resistance you have. Just like what was it, Monday? It was over the weekend. So it was over the weekend, I believe. Any little bullish news you get over this weekend builds up because the market is closed. If you get negative news only lasts about 24 hours, but it's the weekend. So this all positive news just keep building up. When Monday come in, they're forced to scramble already. So then now they're gonna buy even more, and now everybody's trapped. Any type of good news is gonna trap what people, because we're not the only ones that see that pattern. I went on X and I seen it everywhere. Once Talisha spotted it last night, I just started, I forgot who said it, but last night I seen one of them talk about it, and then today I go on X and it's everywhere. So it's like this is going to be a beautiful setup. And then we got Trump coming in. We got 3 more days of Trump over the weekend, and I don't I don't see it at all. I don't. If it happens, I just don't see 720 breaking.
So I think we got to add some clarity so people aren't confused because I also don't see a bearish chart anywhere here.
Mhm.
I do see us needing to come. I do not believe 720 is our low for the year, or the 716 every is a low for the year. And I do think we're going to come back down and test higher time frame structure before pushing up. But I also don't see a bearish chart. I just see us needing to come lower to keep building out the structure to keep pushing up. So I don't want people to be confused thinking like Rams and I are saying the market's going to crash next week. And
Mhm.
NAB is like, no, we're going to keep running up because I don't even know if that's going to happen next week or next month. But I absolutely do think at some point we're going to come back down and test some higher time frame structure because we haven't done that all year yet.
I agree. I agree with that. So basically, what I'm saying this month, I don't see it, but I could see it in 2 months, down the line when um, we know institutions are known for selling their stocks. That's September, August, October. It's when not August, September, October. That's when it gets ugly. So right now, it's just if we look here and go to gold, we'll start seeing money come in.
I mean, and we could really still range for the next quarter, and that's still like a lot of movement, because these ranges have been so crazy.
And that's another thing when
I don't know.
it feels like we're moving sometimes and we're really not
Gotcha.
because the range is wide and like SPY sometimes it'll move $10, the next day it'll move 5, and then when it moves $10 the other day it feels like we're really going somewhere, but not really. So I have gold here. I gotta delete these lines, those two. Let me see if I can get it from the
The
weekly.
ATR for SPY has increased so much this year, it's kind of crazy.
What's the ATR now?
It's around $10. It used to be like $5 or $6
Yeah,
for the
exactly.
daily, and now it's like 9 or 10.
That's that negative gambling. So here, if we look in this area right here, we set up structure in 2025 November around what was it? Yeah, November, October, whatever. When we got that drop, October, we gotta really be careful. October is crazy how it happens over and over. So then we consolidate, um, and then buyers step in this area over here. You get that big, huge green candle. If I come over here to where we're at now, we're in that exact same area, exact the exact same area, and I started seeing the wick down, and then we came down, snatched liquidity, but then we get that nice push up. This is the same area where buyers stepped in over here. We're right here on this big, huge green candle. And if we look to all the way to my right, the dotted line, where we closed around that area for the week. So this is a strong side of gold pushing back up, and it has a lot of room to run up. That's telling me money is coming in, because nobody was dropping any money in gold. You seen it just dropping crazy. And then we go to Bitcoin, silver, and we start seeing that they're starting to build a floor. And then you got your 100-day moving average. You're close to that on the weekly. But right here, where they start the accumulation phase, that's exactly what we're bouncing at now again. And then we go to Bitcoin. And like Ram said, IWM, it's going to let us know. It'll take the first lead down. IWM have so much room to push up. Bitcoin is right under my 200. I'm getting wicks though. I know the retest is coming. Bitcoin is about to attempt to run up to 89,000 again, but it got 70K. But I wouldn't be surprised if Bitcoin ran up to 89K. to be honest. But I still see lower for Bitcoin. It's setting up around the 200. You start consolidating, and you snatch the liquidity and then go up. And then the Mag Sevens, I'm not going to pull up all of them, but we'll go as we go along. But the Mag Sevens, you can start seeing them. They're starting to. Once you see Microsoft and Meta starting to get a little traction, you know there's some money being, because them things is nasty. And Microsoft had one of their best years, and I mean not one of their best years, one of their best days in a while. And I think Meta too was up like 10% a couple days ago. Um, I don't know how it looks now. So I'm just watching the money being dropped in, and then oh, like we saying on Rams chart, I don't want to pull it up right now, but that matter of fact, I am gonna pull it up. Um, it's right here. It This rejection right here. I don't want to say I'm in love with it, but it's not bad at all. It's still closed above these two right here, and you're setting up something nice. If it was a true rejection, would have fell even lower. So it wasn't that bad. They still could stack up and go above those moving averages. But look at RW, and when Rams showed it, it looks nice.
Let me add to that meta real quick
And
before
these
you go
small
on.
caps is going to tell me.
That rejection, I agree with you on that rejection. That rejection, what I think that rejection represents was really the trap buyers that were up there. And when that thing gapped up that viciously, a lot of people got out that play. And that's why you saw it retrace the way it did. But I do agree on Meta. Go ahead. I'm sorry.
No, you're good. And like Talisha said, we don't want y'all thinking that they're saying it's a crash, or when I say that the market's dropping, it's a crash, or just because I'm saying that I think July goes up, I'm bearish on the market overall. Like overall, I know it doesn't make sense, kind of, but the market doesn't just drops. It tricks you, it fools you. It has to make it seem like we're going to keep, like we're never going to drop, and then when nobody expects it, is when it really drops crazy. Your mom here? Okay. So I love you. I love you too. Oh, chain. So
And let me add one thing, Ab. I love this. I love that we don't all see the market the same way, because this just validates like why it's so important to do your own research. Because as you all are trading and investing, like you have to use your capital based on your own conviction, right? So it can't be based on Ab thinks this or Rab thinks this or T thinks this. Like you can use our insight as support or confluence, but it just becomes so important that um, you have your own conviction to enter plays and you're clear on time frame, right? So um, get clarity on what time frame you're looking at, because you could be bearish for the year but bullish for the month, bullish for the week, bearish for the day, right? And so just having all that in mind is really important as well. And so we were just talking about this last night, how much like we love the differences we bring to the market, and then just the Discord altogether. And so it's just cool to see it play out.
that, and I love how we're not biased. So just because I see something doesn't mean that they're going to say that they see it. They're going to say what they actually see, and I'm going to do the same thing. That's what I like, that we don't just agree because we're on the same. For the most part, we always agree, but we're not intentionally doing that, and this shows. Change that shirt.
Now, let's be
Yeah.
clear. If they drop a play that I don't see, I'm still getting in. I'm just going to size, like do a lotto size. So let me be really clear on that.
Yeah. Okay. So, again, I'm really, I'm bearish on the market. I know, I'm just taking it month after month. So this month, I know it's not dropping. Even if we wanted to, we have a president that's just rigging the market. It don't matter. That mean reversion, we see it snap, but we know we have a president that admitted that he trades crypto. He's the best crypto trader right now. Like, it's ridiculous. It's crazy, and he's just on CNBC so calm, talking about how he has these private investors trading for him, and it's crazy. The month, what 3 points more? So I forgot to post it, but I think Monday is when Trump's accounts go live, so money's going to flush into the market. So she changed her shirt. Where is she? So
I think it's today.
The
so
fourth.
They're talking
IWM.
about it yesterday on CNBC or something.
Yep.
Yeah, it's supposed to be the 4th of July.
Yeah. Oh, okay. So look at this. So the 4th of July, and then Monday the market opens. That new money is going to be flushed into the market as well. But look at the sweeps that we're getting. They're sweeping early. The on SPY, that ghost candle, whatever you want to call it, nasty sweep, and they set up the floor. IWM, nasty sweep. It came right down here, and now I see 772, but that's only like a 3% move. That's nothing at all. And then we could drop so freaking hard and target those we're gonna come to 710, 700. But
I saw a post on X I was trying to find that had the companies that are supporting his Trump account making contributions. So we
besides,
can probably anticipate that those are going to have some movement next week. Robinhood was one, SoFi was one, and I was trying to find the post so I can see what the other ones were. I meant to send it to you guys last night, but I forgot. But yeah, like they literally listed out the companies that were contributing. MU, obviously, that was a big one.
it's a
If I
red.
find it, I'll share it.
Okay. MU, he keep that shouldn't be allowed. What he's doing with MU, it's he's not even hiding it. It's crazy. What do we got next? We got
Is the in your face president? Didn't he tell you that he could say whatever he's want and walk down Fifth Avenue and just be okay?
I didn't. I don't
He
know.
said
I'm
he
not
said
surprised.
I could shoot somebody on the
That's what
White
he
House
said.
lawn.
That's what he said. Yep,
Mm-hmm.
That's crazy.
that's what he said.
Literally said I can shoot someone on the White House lawn and I'll be fine.
He
That's
did.
insanity.
Mhm.
Yeah, that's crazy that a president would even say something like that. I mean, it's probably not lying, but it's crazy that you even come out and say something like that. Um, what matters next week? Rams did the um, he did the Talisha, you don't want to add on to this?
I did already.
Okay, I know you just didn't really go in depth, but I know when one of us
Yeah, I don't have a lot. You usually won't hear me add a lot of my macro insight because it's hard for me to have clarity about it because there's such a disconnect with the economy and the market right now. And so I don't have a lot of confidence in the current macroeconomic environment. So most of the insight I'm going to share is just technically what I see on the charts, but the disconnect between our economic state and the market is so wide that I just don't have a lot of confidence in sharing macroeconomic stuff. So
so what
just the
matters
technicals.
so what matters next week? What's your key levels and inflection points?
Yeah. So for me next week, let me share my chart again. You did good job, son. Did he, Jill? 1 second. Like I said, we're actively potty training. Good job. Proud of you. Share screen. Okay. So the key levels I'm watching for next week, obviously you guys know I mostly day trade, so but higher level, I'm always looking for my weekly and daily levels are always critical. So I want to see the 740 level is really important to me. I want to see if we break and hold below here. And then the 750, so really between 740 and 750 are like the main levels that we have just been playing around and I've had hard stops in. So out to the upside, this 751.31, and to the downside, this 740.06 are like my main levels where I will have an opinion about if we're going to push higher or if we're going to push lower first. And I'm looking at the 4-hour right now. If I zoom out to the weekly time frame, it's really the same. I want to see if we break out of the prior weekly range before I have confidence that we're going to go one way or the other. I can't help but notice again, we keep having these failure swings. And so I really want to see if we can break and hold above 751.31, and we'll actually make another swing high, or if we're going to just come in here and continue to make, there's one swing point with a swing point here. If we just kind of come in here, we can't quite get above here. Maybe we wake through just to make another, another swing point somewhere in here, and keep either coming down, or if we just really consolidate on this weekly time frame, but it ends up looking like, another series of lower lows until we get down here, or if we break and hold above 751 and start pushing up for a series of, actually making a new high, something like that. Yeah. So those are my key levels I'm looking for on the larger time frame. From a daily perspective, I just play it day to day, always wanting to see if my prior day high or low breaks, or at least my pre-market high or low breaks before I'm interested in, playing some of the expansion. But the 751 and 740.06, 03 are my key levels for continuation on a higher time frame, up or down. Questions? Peppers is a big mouse. Yes. Yes. Big milestone and an exhausting one. And a messy one. Any questions on that? Those are my key levels.
I got a question. How you doing, Talisha?
Hey, what's up, Virgil?
Hey, I just want to be clear. So those key levels you got are a prior week high and a prior week low?
Yep.
Okay. I see where you have opening range.
Opening range. Yeah.
I see those levels are different. I just want to
Yeah,
make
this
sure.
is, I think, because the new week hasn't started yet, it's still pulling prior
Yeah,
week.
that's what I thought. That's what I thought.
Yep.
I want to be sure. I want to make sure and to be clear. But every indicator does that. It got to update come Monday, then it'll switch over. So you manually drew your lines. Okay.
Exactly.
All right.
Yep. So once we hit the next weekly candle, this will shift.
Now,
And
what do you think about just like if you're saying that it shifts up, so the next week the high is higher than the previous week, so we're kind of like migrating higher, maybe. Just does that mean anything?
talking
Like
about this week here.
yeah, like you got 740.02 was last week's high. Now we're at 751, so
Yeah.
that's kind
It
of like
doesn't mean anything to me yet. I mean, this
doesn't
is
mean
what
anything.
prompted my short. So
Mhm.
these two this failure swing here, it's clear on a smaller time frame. When we swept this prior week, that's what prompted my short swing on Wednesday. And then we swept the highs again. And so I traded the day that day. So it didn't mean anything more than that until we start actually closing above and making a new high, or like making a new high. Because right now we're doing both, which makes it hard. We're making let's see, well, actually, no, we're not. We're making we have a lower swing here, a lower high here, right? And so I'm looking to see how these swing points form. Is what I'm looking for.
I was wondering, can you walk us through? I don't know if you guys have time or have an agenda. Can you walk us through your trade from uh Friday? Did I miss that where you had this?
Yesterday?
Yeah, yesterday's trade. Yeah,
Yeah.
yeah.
Do we
And
have
just kind of
time,
show us how
Ab
you
and
did
Ram?
that,
I think
how you
Yeah, go
got
ahead, take
short.
time.
that the topic for
No, I'm sorry. I
Rez,
don't
what
know
was
the
the special topic again? Wasn't
There's
that
risk management.
risk management.
or staying active in the trade or something like that?
Yeah, the art of managing the trade, risk
So
management,
I
and
think we should talk
in that
about
line.
that then.
Yeah, you could blend this in with your trade, T. You could just blend it in, and
Okay.
we jump right into it.
And it kind of goes into Levine asked me earlier too to explain what I posted about the signs we were going to go lower. So I'll tie that together and try to make it not too elaborate because once I get in the details, I stay there. So here's what I saw. Okay. I always look at futures to prep for trading SPY. Always. I don't trade futures, but futures and SPY basically run hand in hand. So I'm always looking, sorry, 1 second. Micah, chill. Take him upstairs or have him chill. Kids, Lord have mercy. Me. Okay. Okay, let me go here. So I always look at futures. Let me hide some of this stuff to determine, to give me insight in what SPY is going to do. So the very first thing I saw, I'm going to hide this opening range for now. The very first thing I saw on the daily, actually, I'm going to keep it, was on Wednesday. I saw that we had swept prior day high and we closed inside that range. So that was my first clue that, okay, maybe SPY is seeking liquidity down below. Okay. Then I compared it to NQ. Then I compared it to NQ and I said, well, what is NQ doing? Because I always like to see if there is divergence, meaning these two don't align. So I saw that SPY has swept Tuesday's high, but NQ did not sweep Tuesday's high, right? So thanks, babe. NQ did not sweep Tuesday's high. So that was my other clue where I'm like, oh, we have some bearish divergence because one is sweeping highs and the other one is not sweeping highs. The one that does not sweep the highs is usually the weaker one, right? And so I'm like, okay, interesting. So I kept that. So this is what prompted my initial trade where I entered short on Wednesday. Now, I did not anticipate us to go back up and sweep the weekly high again. I thought we were going to drop from here, but we did. So my contract did not pay as well as it did, but that's okay. Okay, so that was the first clue. The second clue on yesterday, we swept, SPY swept Wednesday's high, and notice again, NQ did not sweep Wednesday's high, even more bearish divergence. So I'm like, oh, wow, we're really going to tank. Now, if I was more comfortable trading QQQ, I would have actually traded QQQ yesterday because it was the weaker one. But I just got comfortable with SPY and I know I'm more familiar with it, so I traded SPY. So that was the first thing. I said, okay, we have divergence 2 days in a row. We're likely going to drop. That was my bias going into the trading day. Once I got into my lower time frame, and I usually start with the hourly, I was looking at, we're on hourly. I was looking at a couple of different things. I noticed we had divergence, and then I saw on SPY, we had actually gone up and swept the prior week as well. So now I'm like, oh, SPY is getting a lot more liquidity for something, right? So I was already like, okay, I can expect a big move. I don't know where it's going to happen yet, but I'm expecting a big move here because of how price is behaving. Then I looked at my range and I saw that overnight we ran straight up to the top of the range, right? So this is all coming into pre-market, right? You see all this, like if I go to the 30-minute, this is all like right before the market even opens, right? So at 8:30, we're running up for the range. Okay, interesting. I'm noting this right now. Then once we market open, I go down to the 15-minute to start. I like to look at price on the highest time frame I can um, before my ORB completes, my 15-minute ORB completes. So I'm on the hourly up until market opens, and then I go down to the 15-minute until that ORB completes, and then I kind of watch price there. So on the 15-minute again, and I kind of was commentating this in my channel, like, okay, we broke my ORB. Once this 15-minute candle opens, I'm now down on the 5-minute. So I have a couple things in mind. We have bearish divergence. We're at the top of the range. We did break my ORB, but I'm super hesitant on going long because my risk to reward from here is so low, right? My next proven level would have to be my high of day. And the only time I got a pullback was here on this candle. So I don't just anticipate we're going to go up here. I'm like, where has price already proven itself? So we run up, break my ORB. This is my first pullback candle. I'm not taking this trade to this high. That doesn't make any sense. And we're at the top of the range. So this is when I shared we're at the top of the range. Like, be cautious if you're going long because we don't know price is going to keep going up here. Okay, so I didn't take any of this because this wasn't good risk to reward for me. So then I'm still watching the 5-minute. And I'm seeing that we're closing below lows with some very strong candles. And I believe we had nice volume here too. Yes, the volume was starting to spike from the previous volume candle. The volume was starting to spike. So this is where I started to say, okay, bearish thesis is likely playing out. Now I want to see if we close below VWAP. One of the things that's helped me a lot is using VWAP as my filter for calls or puts. So normally I don't take trades, I don't take shorts above VWAP or calls below VWAP. But there are times where I will, if I can see that we're clearly rejecting from like up here somewhere, and I will trade that down to VWAP. But in this case, the market had been moving funny. And so I wasn't as confident. So once we close below VWAP on this candle, I believe it was, what time is it? 10:25. Yeah, around here. No, I entered down here. Once we close below VWAP, I said, okay, now I'm interested in shorts, but I want to see a pullback and rejection off the VWAP. So I waited for that. So even though we were still inside my ORB, this is where I'm taking a bet because the bearish divergence is playing out. QQQ and SPY were aligned at this point because trading when they're diverting can be challenging. And we're starting to break minor structure. We're below my VWAP. Things are looking good. And we're displacing with fair value gap. So this tells me institutions are in this move, right? So this is my first entry around here. I entered at like the break of this candle. So just so you can see it, I entered here at like the break of that candle, right? Waited for bids and asks to break, and that was my first entry. I entered really light here because we were still inside my ORB and we could reject and go back up and just play around. So I entered light. And then once we broke my ORB, I started adding one of these wicks. I started adding, I moved my stop loss to the new entry, and I added somewhere in here in the lower time frame, probably a 2-minute time frame I added. I moved my stop loss, and one of these triggered my stop loss, my break even. So I was already in nice profit, and then my runners got stopped out at break even in one of these wicks. Then I saw, so I'm like, okay, good trade, I'll take it. Then once we got down here, and I saw we were already below, we were inside prior day's range. We had broken the 930 open. We were below my ORB low. Now I'm like, oh, okay, we can have some more downside to go because look, we're still in the top half of the range. So once we started getting down here and chopping around, I'm like, ooh, okay, we're flagging. We're flagging to potentially go lower. So I'm looking at this little area here. Maybe, and again, I'm doing this on a smaller time frame because I'm already trading and I'm adding now. This did stop my runners out, but then I took a new trade here. So this is where I got into a new trade because I'm like, we're breaking structure, we're going down, we have a nice pullback. This is a beautiful candle. I love how we're wicking at the top. I love how we're closing below my lower levels, I'm gonna try this again, right? I'm gonna see what else the market gives me. And so I entered again on the break of this candle, and then I was able to ride this here. I think I added here. I think I added here because again, I'm still playing cautious because the market's kind of crazy. And then once we got down here, I think I said we're probably going to hit prior day low, and that's when I was out altogether. Somewhere here's prior day low. I was out altogether like right before we hit prior day low because I got out here. Once we started wicking at prior day low, I'm like, okay, I'm all out. But that was the setup for taking this drop.
So when you I guess one of the things I struggle with when you say and I'm just trying to figure out how to do this when you say you broke the candle on the first entry, you broke below the candle, I
Uh-huh.
guess, on your very first entry, that one, yeah. Do you wait for the candle to close, or do you purchase as soon as you break, as soon as it breaks, just the five, as soon as it breaks, or do you wait for the candle to close, like the 5 minute
No,
to close?
I wait for the bids and asks to hold.
Oh, okay. Yes, right. You said that before. Okay.
Yep. So
All right. I like that.
747.80 was my trigger. I want to see bids and asks break 747.80, and I want to see them start falling. I want to see the buyers letting up, and I want to see the sellers willing to take whatever. And so I
Okay.
wait for 747.80 to break with price. And then I look up here and I wait like 3 to 5 seconds. So I do get some slippage because I'm waiting a little bit. But it ends up being minor and worth it. I wait for these to break the 747.80 as well and hold. And then I want to see them start falling or rising depending on which direction I'm trading. And then I hop in. And
Now,
again, I hopped in light because I was still inside my ORB, but then I added heavy.
how do you feel about, because I guess I was looking at it when you put it and I was trying to figure out, I said, where's the fair value gap? I was expecting it to retrace and
Yeah,
you get a, trade from the fair value gap, but I guess that would be inside the fair value gap would be inside the opening range breakout. Is that like a place that you could take a trade? If I see that,
absolutely.
but it never
So
got there, did it? It never, the
we did
second candle
not.
never got there. And that's what, and I was like, man, I don't know. Like I'll be having those decisions real time. Like, do I, it didn't get there. So like, do
It's
you
so
not
funny.
take
I
the
was just
trade
talking
or?
about this last night. So if I had a fair value gap, I would have sized heavier on my initial entry because
Oh,
that's
okay.
a
Okay.
really solid. But since I
Okay.
didn't have a fair value gap and we were still inside my ORB, I sized lighter. I
I
sized
like
very
that.
light to get in
Okay.
first because my thesis is still strong. I just don't have as much confluence.
But
So
the
that's how I
VWAP
manage it.
the VWAP kind of gave you a, like
Exactly.
it was like, hey, that candle, that second candle wicked up to the VWAP, and it was like, okay, this is it, and it came
Exactly.
down there and broke. Those are kind of like discretionary decisions, like, and I struggle with that. Like I see so many things, and I see so many things like I can make a lot of decisions. Like, well, what are my rules? Like, what matters on the chart? Is it the VWAP? Is it you know?
Yeah.
Getting the fair value gap? Is it the open range breakout? Like,
So
And
you
the
struggle
thing
with
is,
your confluences like I do.
yeah, yes, I get a
it
lot of
doesn't,
confluences. Which ones are about one? Which ones are like, which
this
rules
is
should I be
what,
following?
this is what's helped me the most. And this is going to sound crazy, but it goes into what Rams and Ab are going to talk about. And yes, Alex, my purple line is the VWAP. It doesn't matter. We're playing a game of probabilities, not certainties. Whatever confluence you have does not matter. Just know the more confluence, the higher probability.
Mm.
So rather than say, which is how I used to trade and I got burned so bad, was if I don't see my perfect setup, I'm not taking the trade. If this doesn't retrace into a fair value gap, I'm not taking the trade. If I don't see this bounce in respect and come exactly right down to this level I want to retest, I'm not taking the trade. And I was never taking trades. So I would literally watch price go where I knew it was going all year, and I wasn't taking a trade because I didn't see my quote unquote perfect setup. What I've pivoted to, and I have to give credit where credit is due, like when I started mentoring with Samesh, he taught me this, like this is like gold. And I'm like, that's the transformation. It doesn't matter. What matters more than anything is how you manage your risks, right? So the more confluences I do have, the heavier I'm going to enter that trade. But if I only have one confluence, I'm not going to not take it. If it looks like a good setup, I'm just going to enter it very light, right? Now, if I have no confluence, like if we were still above VWAP up here, I'd have to see something to tell me we're going to go lower. But if I had no confluence, then I'm not taking a trade. Like there's no trade there. You're just hoping for the best. But if I'm seeing like, okay, I have bearish divergence. We've already swept the highs. We've closed below VWAP. I'm back inside my opening range. I'm below prior day high. I'm below pre-market high. Like I already got 6 confluences. So a fair value gap isn't going to make a difference, right?
Yes.
Now, because we were in this, so if we had broken out of this opening range low and I did not have a fair value gap, I would have entered in my normal size because that was plenty. The only reason I went light was because this opening range can be a filter for chop. And I don't want to get stuck in chop, especially because y'all know I trade 0 DTE. So chop is not my friend. So that was the only reason I went light here. But if
I'm
we had
glad you
already,
said that because when I was trading with Moose, it was like no trade zone. Anything within the ORB, we had designated as a no trade zone because you didn't know what it was going to do in there at any given moment. So
and
that's
that's
another
very
thing that
true.
causes me to pause.
That's
I was
very
just gonna
true.
ask that. I was just gonna, because I would have been like,
Hmm.
I would have been like, well, I can't take a trade till I got out of the ORB, like, like, and then come back inside, and then it closed below,
So
and I'm like, okay, now on that candle where you have the doji kind of the turtle soup candle right there, yeah, that candle
yeah.
there, that would have been, I guess, an entry I would have liked, but there's no fair value gap, so I'm still stuck there. But like, yeah, I mean,
Now, let's see if on the 15-minute, if there's a fair value gap there. No, there still wasn't. Yeah, that's where you just got to manage the risk to reward, right? So, and this is exactly what I was talking about last night too. For some folks, this isn't worth it. This isn't worth the headache. This is still choppy,
yes, choppy,
right? This isn't worth the headache for some folks. So don't take the trade. Wait for
yeah,
this. You know what I'm saying? Like, that's okay too. But if I didn't have, and then to your point, Levine, this being a no trade zone, if I didn't have all these other 5 confluences, I wouldn't have taken this either. I would have waited for us to break outside of here. Now you see, once we broke ORB and retested, right? Whatever, this is probably some sort of moving average. I don't know. Let's see.
mhm.
This is blue line is, I think, the 5th. I don't use moving averages a lot. I just started incorporating them, but I do like the 8. I like the 21. I like the 200. But anyway, I don't normally take trades off of them, but this would have also been like, okay, cool. We're trading into there. That's even better, right? And I think the blue one is, what's the blue one? The 200. Okay. So that's even better. Trading into that. Fantastic. Um, but if we didn't have already these confluences up here, I would have waited because you see, once we broke ORB low, we actually start to trend. This is expansion, but it's kind of choppy. And for some folks, that's not worth the anxiety or worth the headache. For me, I was fine with it. But for some folks, like I don't want to wait, I don't want to experience these green candles. I want to just drop and have tiny green candles. That's fine. So it's not right or wrong. It's just like how you manage your trade and what your risk tolerance is. For me, if I have 5 confluences and I'm just not below my ORB, I'm hopping in, but I'm not hopping in full because if we do decide to reject the ORB low and start chopping around, I don't want to lose too much, but I'm willing to lose a little bit to see if this thesis works.
Huh.
Once we did this, I'm all in, full size. Here I was like 1 or 2 contracts. Here I went full size. I added 5.
Charlotte asked you, but she doesn't use the indicator. She asked you what indicator are you using to see the fair value gap?
I don't use one, but you can use one. There's a really good one called who does it? This one, Nephew Sam, FVGs. That's a really good one. I don't like it because I don't like my chart too much. Like this is already a lot for me on the chart. I don't like too much on my chart, and they mark like every fair value gap, and I don't care about all of them, just the ones I'm going to take a trade off of. So that's why I just mark them manually. But as you're learning fair value gaps, that's a really good one to use to get a sense of seeing them.
Oh, so what is that? I see green in the background and then it's a neutral in the
Oh,
middle. What is that?
this is Ram's secret sauce. I can't even talk about this actually.
Oh,
No, I'm
I'm
kidding. I can't even talk about this. This is the secret sauce. I learned this from Ram, and you all, I don't know. I'm not going to assume anyone has underrated this tool. I will say I underrated it at first when I
Yeah.
first learned about it, and when I started adding it, it is substantially more accurate than I ever anticipated. This is the expected move, the daily expected move from the options chain. And Rams did a whole segment in one of the lives a while back about how he gets this.
I
But
need
that's
that.
what this is. So this is the extended move, the gray area is the expected move, the average, the 68%. The red area is the bottom 16, the green area is the top 16
Okay.
percentage. And look at this. Like I just love this because look at how we respected this. Like we literally rejected it almost to the penny, if not the penny, right? So, and this was also part of my trade thesis because I'm like, we're up here. I'm not going long from here. The range ends here. Now we could have pushed up, but the risk to reward wasn't worth it for me here.
So say that again. You're saying that that's his expected move right there, the green and the red.
Yes,
And then
that's that. I'm gonna
extended
go to a lower time frame just so you can see it
then
clearly.
extended range. I didn't know he had that. I've been missing in
Yeah,
action. That's dope. So he's using the curve there, like 16% out on the edges.
exactly. The whole bell curve.
The
And
whole bell
so
curve, yeah, the bell curve.
I've gotten in the habit of adding these to every like yeah, I got to give Ramses flowers for
Well,
this. This
Rams
is
be on it,
the
man.
mad scientist genius.
That's
I did
crazy.
it for the yearly, so I'm like, okay, we're tapping into we've already tapped into the extension of that range for the yearly. You know, maybe we're gonna come down here and test the middle part of this range or the lower part of this range, right? I did it for the quarter. Okay, where are we at for the quarter, right? I do it for the month. Like it is the secret. Like I shouldn't even be talking about it actually. It's the
Oh,
secret sauce. Y'all got to pay for that. No, I'm kidding.
I'll pay.
It is the
it's
secret
the
sauce
implied move.
though.
Can you say it's the implied move in the expected range? So it's two different ranges, you say?
I just use the expected. So yes. It's the expected move on the options chart on the options chain, and then the expect and Rams can do this way better than I can do it justice. But the expected moves gives you that 68% of the bell curve,
Hmm.
and then you go find the other 16% of each tail.
Oh, okay. Okay.
And the accuracy, like there's
Oh
been
yeah, I
several
believe it.
times where I'll send Rams a screenshot, like, are you kidding me? We stopped at
Mm.
the penny,
Well, I know.
right?
I
Like
believe it. I absolutely believe it.
crazy.
100% believe it.
So this kept me out my trade. And even at the bottom, I'm like, the temptation to hop in, and I'm like,
That's
we're at the
crazy.
bottom of the range.
Man,
We're
you
probably
got
gonna
this.
mean
That's
reverse.
crazy. That's next level. I like that. I love it.
So
It's
where's this
so
video we
accurate.
can learn that
Yeah.
what you're talking
Yeah, we
about with
can get
Rand?
it. Yeah, repost
Yep.
that in the Discord.
He knows the lodge. Rams went over this about 3-4 times. It's a few videos. I'm pretty sure he knows the links. I don't.
I
Yeah,
have it. I just asked him for it last night. I'll post it.
It's so,
Okay.
Because someone else was asking about it too.
that's why this is all
No, we
crazy
did it in
that
April
we're
and May.
talking about this because Rams and Talisha literally had a full conversation about this last night. And then the way Charlotte just is crazy how that just played out.
I think we just
Right. I'm
underrate
like,
it.
wait a minute, there's some gems right here. Give me
Yeah.
that information.
We underrate how powerful it is. And I'll be the first one to admit, Rams told me about this like back in Patreon days. And I was like, okay, that's cute. I underrated how powerful it is. Like I didn't start using this until about a month ago. And I probably learned about it almost a year ago, embarrassingly, right? Because I just underrated it. I'm like, yeah, the move, but you can get the level. No, the move, the expected move, please. That's next level.
Mhm.
And if you don't know, Rams is actually on here, so he could tell you exactly.
We
Yes.
love Rams. We love Rams.
He might have said.
Anyway, that was the trade. And then for those of, I'll say one more thing and I'll hop off. I'll stop sharing. The other thing, for those of you that trade ICT, this was absolute textbook making of a candle. Your accumulation, manipulation goes up, your open, high. Let me get my little thing so you can see it. Your opening range, your high, your low, and then your close. Textbook making of a candle as well.
So when you've been using this range, how often do you stay inside the box, and how often do you see going out to the green and red areas? Like, is that normal when you see, like, I guess you said that was a confluence for you, so I would imagine you don't see every day where it gets to the outer edges like that.
I've been seeing it more and more get into the green or the red zones. Most of the time it stays in the gray zones, but I have been seeing it like breach these red and green zones more often the last couple of weeks.
So those
Yeah,
are days you're
and
gonna
to
have
even add
more.
to that shock, let's say you see it at the top of the range and at the gray zone, you already know it's at the top of the range. So this is where you would flip the switch per se on your risk management. Like, oh, okay, we're at the top of the range. What do I have left? I only got this portion, which is the extended edge. So now the confluence starts to stack where even if we go through the top of the range, now we know I'm sitting inside the 0.16 delta. This is going to get mean reverted at one point or another because the chances of you actually trading in the options chain now, right? For you to go so far out the money, whether you're going on a put or a call, and say, okay, I'm shooting for the 0.16 delta strike price. For you to get that, it's slim to none. So when price actually starts going there, and let's say you hit that lotto ticket, it's make or break. You're gonna cash it, or you're gonna sit in there and not manage your risk because you are actually sitting in an extended edge for the week. So chances of the mean reversion, it just explodes. So if you sit in that trade, those profits are just gonna evaporate.
And that's where I've been adding, because I'm no expert in gamma, but I've been learning more about it and adding that in. So the moment now, because of what Rams taught and what Ab has been teaching, the moment I see us at the extended range, I'm like, are we in negative or positive gamma? Oh, it's positive. Okay, mean revert. You know what I mean? So that's also because we didn't flip negative on Friday until like here, I think, like 7:47 something. Up here, it was still positive. So I'm like, oh, we're at the edge of the range, positive. Okay, we're going to revert to the middle. At least we're going to come down here to the middle of this range.
Right. And now you're going to have situations where it'll totally disrespect the weekly range and let's say break to the upside. You see a situation like this, you have about, if it's a weekly, you have about 2 hours to come back down, right? And mean revert back into that range. If you don't, what does it mean? It means high probable continuation. If you break the range, and I'm talking about extended edge and all, the full entire weekly range, and you break to the downside or to the upside, you can say if the zones do not pull this back into the weekly range like a strong magnet right away, this move will have continuation if you disrespect the zone for the week. But what I'm gonna do is, we talked about it last night too, but because the weeklies and the ranges, the question has been coming up a lot more often. So I'm gonna make a video just dedicated to this, and I'm gonna add a couple of things to it as well. So there's just a dedicated video, nice 10 to 20 minute video, just doing this format, so you guys can have it.
Yeah, it's golden.
That's good.
Alex asked something. Yes, Ab has a console that tells you exactly what the gamma regime is and when it flips, and then even when to buy calls and puts and what levels it's going to price is targeting.
Yep, he's a monster.
You could probably trade just off that.
That's a fact.
Rams, your setup is so fire, bro.
My background.
Yeah, the bookcase, the lights and stuff. I'm just so mesmerized by it.
Good Lord.
That's fire.
Appreciate it. I'm gonna put more. I'm gonna make some Sniper HQ posters and all that. Get the
Nice.
box up there.
It's the book thing that just like make that area pop.
There's a lot of knowledge in there. Oh man, I spent a lot of time right there in that corner. You know what's funny? Back there, I got 2 books on Virgil's recommendations.
Hmm.
Oh my God! Look at this.
I love how passionate he get.
Look at this. Verge. Remember when
Oh my
you
gosh,
talked about
that's a book.
Yeah, that was
that?
yeah.
Yeah,
Japanese
man.
can't.
Oh yeah,
Oh,
that book there. Yeah, I I
And
seen.
then,
Go ahead. Oh, you're Beyond Candlesticks.
mm,
oh man,
I need to write
Verge,
those down.
this was on you right here.
Yeah,
Thank you for this. For
yeah.
real.
That first one, I really liked it a lot because I can see where the ICT guy got a lot of his stuff out of that Japanese candlestick book. I mean, if you read that,
Mm.
like some of the first principles, he was talking about, splitting the candle in half and, looking at fair value gaps, but in a different words and stuff, so
Ooh.
it
All
was
the
really good.
same.
Have you
You know
guys
what I do recommend? I recommend this. This is a very high recommendation though. Um, and I'm gonna recommend this as well because this
it's a
is
fat book? You Rams, put that book back, the one in your right hand.
Crazy.
I'm
I
gonna
see
recommend this.
you had to
Are
grab that thing.
officially part of the Geek Squad app. You can't help it. We all in
Y'all
here.
already know.
Rams is the
So right
leader.
here,
He's the leader of the
this
Geek Squad.
this book right here, this is an abs special right here, and y'all gonna see why.
Yeah,
Look down here. Look down here.
Yeah, super
I
fire.
know you.
Oh yes,
Oh yeah, yeah. Oh yeah.
I remember that picture. The
This
screenshot
is
somebody
the
posted.
infamous page that Ab posts,
That's
and he's been
good.
posting this since he got into Patreon.
I know.
Mm-hmm.
And
I asked him once. I said, "Where did you get that from?"
I had to find out what page,
That's
what
good.
book this was on the Data Digger. But now this, I love this book because I like to learn from the greats. So this
Oh
book right
yeah,
here, I
hell
know it's fat, right?
Mark
But you could
Minavini.
say, right, everybody that's anybody is in here. Now, it's not like the whole book it's there's sections. Is this champion, this champion, this champion, this champion, and you get a grip into their minds and the way they think, the way
Mm.
they reason, what they look at, how they made it. It's just I love it. I love it. It doesn't have to necessarily just always be like, oh, let me learn the patterns. I just want to learn how you think.
hell yeah.
This is so
Good.
good.
Yo, that's my addiction, bro. Oh my god, I have
Good.
addiction
Facts.
with hedge fund managers and shit. I don't know. It's just-
Facts.
An addiction to hedge fund managers is wild.
Alicia, I will sit here and watch it's like 45 minutes to an hour. I'll like if I'm not doing nothing, I'll find myself watching like probably 3 back-to-back
That is the nerdiest thing you've ever said. I'm not even joking.
I know your face so straight and I don't give a damn. Yo, I really be trying to tap into their mind. It's like them Bill Ackman and all of them, they're geniuses.
They are. That's facts.
So
They
which
really
one of
are.
those books should I read? I don't understand candles and stuff like that.
So go for this one
Which
first.
one?
This
Which
is
one?
the shock that this is like the principle. This is where it all
Japanese.
started.
Okay.
Japanese candlestick. This is like the candlestick Bible, like the true version of the
Yeah,
guy
that's the
that made it.
original.
So this guy traveled out there to the guy that made this whole candlestick language, and the guy had to have interpreters over there talking to this other guy. The guy would explain, and then they would have to like do. Oh man, the whole story's in here. It's so good how this came about. This guy is still alive and all. The guy that made the candlestick
Oh wow.
charts. Yeah, this is insane.
Well, what's
This is
crazy
insane.
is that when you read the book, you realize that we were using bar charts up until like 20, 30
Yes,
years ago.
Mm,
Everybody
yes.
got candles and everybody takes it for granted. Oh, can you see your candles and your close and your open? It was just a line or
It was
two
aligned with the
hashes.
close and the open, and you could
Yeah,
see
this
it. It's so crazy.
it was
I never got used to that.
yeah, this is a revolution. This was a revolution in the 90s. Like
Yeah.
people, we totally forgot the history that he revolutionized trading with the candlesticks. And then some of that information kind of got like, I don't know, just kind of pushed to the background, like the fundamentals of how the candles are made, the haramis and stuff, and or the bearish engulfings or the bell holds but there's all kinds of little, I didn't read the book again, but there's all kinds of little details in there if you go through like, oh man, I seen this, I seen this, I seen this, and you can see where people have pulled that apart. Because we was just using the open, the close. You didn't see he had a candle body, so it was wild because he had to go through different parts of Japan and go talk to different people. This guy knew about gaps, and this guy knew about what they call the three method, which is the three method pattern is a bull flag or a bear flag. So it was different names, and people kind of the book was he started a revolution with that,
Oh
and
yeah. Oh yeah. Oh
it's
yeah. And
people
before
forgot.
we leave the book subject, I cannot go without the book subject without promoting this.
Oh
This,
yeah.
I mean, if when you guys ask me how can I read context and price the way I do, I'm not gonna lie to you. I've read this book maybe 5 times, halfway through six. I just gotta like not memorize, but really ingrain in my head all the chapters that matter to me here. This here. Look, just read what the book says. Complete guide to volume analysis. Read the book, then read the market. And that can't be farther
good.
from the truth. My number one recommendation, and it always will be. That's what I got for the books. I got more, but I'm not gonna overwhelm right now.
Really good.
So now we can hop into our topic, which this blends right into risk management. Now, Ab, you want to take it first? Or you want me to go first? I'm ready, so it's all good.
It don't matter. I feel like I haven't talked in a long time, but
Oh, go
I'm
ahead.
just gonna talk to myself, so it's okay. No, it's
How
okay. You
about
can
this?
go for real
Let me
because
go
I
first because
need to
I'm not
get that
even gonna
out.
go too crazy. This topic is the most important topic by far. This topic is very very dear to me, right? Because and I'm not gonna go crazy. I'm gonna let Ab have his time too. And the reason this is very dear to me because in 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 the ring, right, in my structure, what dictates my style of fighting is always managing my risk, right? I'm always managing my distance. I'm always looking to see if I got you hurt, if you're still dangerous, if you're still fresh, if I hurt you and how you respond. So risk management is my footwork, is my defense. That comes first before I take any trade. Before I throw a jab at you, I gotta find my range. Where you at? Where you at? You here? Oh, I caught you. But I'm looking first. I'm defining my risk. How close am I to you? How close are you to me? Can I touch you? And can you not touch me? If I can touch you, but you can't touch me, I'm in perfect position, right? This is risk management. Now, there are two, there are about three things, right, that come in conflict with people and the way they manage risk, right? And it all comes down to the way the brain or the way you're wired, the way we're taught to think, right? And again, one thing it's something we call in the gym a brawler's high, right? A brawler wants to brawl, right? So now when you're brawling, right? That's the style, and typically it's the Mexican style, right? So when you're fighting against a Mexican, you already know this guy got hurt. This guy wants to push in front and pressure. He's gonna be durable and
Quiz.
take hits. So you gotta manage risk right away. You gotta know your opponent. You gotta manage the risk. If he wants to brawl, I gotta manage my distance. Now, what happens in the brawler's high is this, and this happens all the time with this fight style. You go on a winning streak, and you think, "Oh, oh, I'm putting everybody down, putting everybody down." Okay. What happens is you start to assume that this heater is going to last forever. And now, instead of you tightening your guard, right, being aware of the risk, right, what you do instead, you start to swing even more wide. You just crazy. You want to get him with it. You, right? Now, listen to this and listen to it closely. Write it down if you need to. You get knocked out at peak confidence, not at peak fear. When you're at peak fear, all the antennas are up. You're watching for every little corner, where the hole's at. You're at fear. You're at survival mode. So your risk management, the volatility of your risk management goes up the roof. But when you're at peak confidence, can't hurt me, boy. Come here. No. And you get hit. Lights out. Lights out. Why? Because you didn't manage your risk. I got you hurt. I got to capitalize. I need to capitalize. If I can't take you out after I got you hurt, I need to manage my risk. Okay, this guy is durable. I hit him with everything. Threw the whole entire kitchen sink at him. He ain't budge. He's still moving forward. What am I gonna do? Prove something to you and keep brawling with you where now you can capitalize on me? No, I must manage my risk. Step back and see if anything that I did to you budges, right? This is the brawler's high. You have to be very careful with it. This is the equivalent of you being in a play. The play, your analysis is dead on point, right? The play goes. You're like, ooh, I hit. But now what you do? Well, I got all this upside. Now you start, well, I'm good. I'm winning. I'm cool with it. But then what happens is you never capitalize. You hit that. You didn't capitalize on that strength. I caught you. Boom. Let me go try to get you out. I got to capitalize on those moves. I capitalize into strength every time. If I hit, take profit one must always and always be respected at all costs. That is non-negotiable to pay yourself for you analyzing the data the correct way. For the data to play out the way you said, bro, pay yourself. Do yourself the favor and pay yourself. Because what you see unrealized is not what is realized. And what usually happens is unrealized is big green. But by the time you realize it, you realize under a loss. You realized it under emotion, right? Because you saw that green, disregarded it. Now, to jump into this usually happens, right? When you have a green trade that turns red, is the psychology of we love to do this, right? How many times? And many of us go through this. I'm just gonna do the analogy of the car, right? How many times? And we're all old enough. We most likely been through this. Now, how many times did you say, man, my car, man, that thing a hoopty, bro. I can't wait to get that bangs. Like, then you got the nice car, right? But we adapt so quick. We're so quick to always raise the bar, right? That as soon as you get the bangs, you're like, yeah, I'm balling now. Oh, we in. A week later, what happens? That bangs ain't nothing no more, right? It don't mean this thing, right? So a lot of times you might see your play up 1,000 a contract. And what? Oh, no. That thing could be 1,500 real easy. You're moving the bar for no reason. $1,000 a contract is $1,000 a contract. A Benz is a Benz, right? In Spanish, we say "tú estás montado," like you own that, like you. But you don't realize, and now that Benz, that's garbage. I need the Ferrari, and that's how you get cooked, right? Because now you're waiting for something. You made that goal for you, and instead of getting used to that goalpost, mastering that goalpost, you said, "Nah, it's still not enough." This is very poor risk management skills. Very, very poor. You cannot be profitable in the market trying to hit home runs every time you make a play. You have to make your rules. I got to respect my invalidation thesis. If I close under a certain level, if I close where this invalidates, I must exit the play. If I hit my take profit, I must scale out. If I just gap and go after I get in, and I am in so in already I'm in 40%. I'm already in 70 in one day. Who makes $1,000 from one day to the next? Not many people. But we are just so we see other people, other gurus, and I'm by far a stock market guru. I'm a data digger. We all do our thing here. We're not gurus. We just like the knowledge. We like to learn. We like to grow. In order to grow at this game, risk management must be in place because profits roll in when you realize gains. This is the only way you compound success. You cannot shoot for the home run every single time. You can't come in, ding, ding, bell hit. I'm just trying to knock you out of the door. It's not going to work. It's not going to work. If the knockout comes, it comes. Work round by round, level by level. Get paid as you go. As you're going forward, you're getting paid, right? Always make sure to pay yourself. Now, this ties in to you want a one hit a quitter power. That's cool. That's cool. But you got to catch me first, right? So if you can't touch me, what good is that? So every time you expect to get in a play, and you're always gonna think, well, I gotta hit 100%. I'm not gonna catch if I don't double my money by 100%. That is poor risk management. You need to pay yourself. Now, I'm not gonna take too much more time, but we're just going to go over just to a quick recap. And it's funny because I was like, hey, you know what? I'm gonna bring this up because this is a master class. Real time for you guys to see. And you're always this is the every strategy that I have, every trade style, trade intent that I take, my risk management is always the first thing to be put in place, right? Now, here we get into we wait for the nice sweep. We waited for a nice capitulation bottom. Okay, big sell-off, big volume coming in. We need that last put, right? That I was waiting for. Gonna go too into it. This is one of my vital strategies now. And it's all to do volume anyway. And I always use an average. They're always now. We get in trade. Next morning, we just take off. Cool. What we paid. We paid 641 contract. I don't know how many contracts guys buy. I don't know. I have a certain amount, and I was able to capitalize on this trade because I profits that I need to put out there. My capital So I'm able to buy a couple contracts here. Now my conviction was pretty high. Now you guys know that last week we were looking, I was looking at NOC. We mentioned that level. Okay, this was one of the levels I was looking at on the chart, and we could look further left. But we were looking at 23 level. I wanted to see the reaction there. By no coincidence, I told you guys this level was a big, big generational level. Yeah, I'm waiting for my calculation. We get the sweep, right? And then we get massive rejection of the upside. On my 1 hour scale, we get above my home gauge, which is at the same time. I'm going to talk about this so much, but right here is my 20. This is a really average, but we'll get to that other time. Now, we make it. I see the push. I already see the intent, right?
Should we
We
be
get
seeing a chart?
You want to see it on the chart?
Oh.
What you
Someone's
said,
like, I
Levine?
don't see a chart. I thought you.
You don't see.
I
You don't
thought
see
you were
my.
addressing a chart,
No
and
way.
somebody asked in the chat.
Oh my God! I wasn't sharing my screen. Thanks, Levine. That's crazy. I did a whole bunch of stuff too. All right. Wow.
That's
Okay. Well,
I hate when it.
yeah, that's crazy. All right. Well, look. What I was showing, just a quick recap. We were showing the day we got in. Okay, that was the day we got in. We got in at 3 before market. We made it for you. Cool. I saw everything I needed to see. I saw my installation happen. I saw the leap happen. See what happened right. We got above my gauge. And I didn't want to talk about this average right there, but that is the volume weighted move average. I'll get into that different segment. And just so you know, I do use the tool for my volume weighted. And that was my 20 day there. So I think I really my we got in right here at around 504, somewhere there. I saw everything in see. I got in with conviction. Now, did I know we were just gonna up and gap up like this? No, but you're never gonna know that. Now, I just knew we were at a key inflection point. Look at my 50 day right here, right? We reclaimed, we're here, we're reclaimed off my moment game. This has upside. This has upside, my spot 14. Risk management is always there. My defense is always there. I am not the only one punching here. At some point, something is going to fly back, and I need to be prepared for it. No matter how many times I caught you, at one point or another, you're going to throw something through. The next day comes. This was hilarious right here. All right. So the next day comes in. NOC, we just gap and go, right? Where is this thing? We just got go. This thing gaps, boom, it just goes. So now, at this point, we are up 17% on this play. I said, if we hold 214, and instead we're getting out, yes, we hold 214, next target becomes this. Perfect. We ended up holding. At this point, we're up 17% on the play, which was $300 per contract. Great. Remember, at the same time, too, drop in and companies, not every company moves and has a change like, and it's something that's very, that everybody trades. NOC and, you know, other companies like this, they have very unlit markets, right? Like very empty. So you're gone a little sick, but when you start getting this type of volatility coming in, these contracts, because there's not that many people in it just yet, you got pricing once things to take off. Once it starts to take off, it's crazy what the market makers will start paying you. They'll tell you, we'll pay you at this much more cash on the month. Nah, I don't want that. I don't want that. I could have sold these contracts at 3,000 a piece, but because I don't want to haggle, I told them, give me what you guys about to see in a second. Now, at this we were up. I said, yo, we do this. This the next target. Then what do we get? We get a situation where this thing just goes. It just goes. So I'm just like, damn, I didn't get paid. I said, if you have multiples, because we are in strength, right? So I didn't want even those we got in one contract. This is why I gave the explicit directions. If you have multiples, trim here. If we hold here, 535 is the next stop. At the moment, we're at 524, right? If we hold here, 535 is the next stop. So I wanted the people that had a one contract trade hold. Why? Because we lose 540 right here. There's momentum. We were down here. You were still not going to be in red. Okay, great. We leave. We leave the trade, right? We still didn't lose. We still got some profit. On to the next one. So now, this is why we manage with one contract. Stop loss at 14. Oh, I never said get rid of it. Like I said to the multiple contract people here. I said we trim here because we're trimming into strength. Trim, but if you have one for 5 break before you get any decision on that's
Yeah, Rams.
sure.
Your thing been going. I thought it was just my connection. That's why I never said nothing. I can hear you, but it's like it's really choppy, and sometimes it goes all the way out, and then you come back in. It's your connection. Turn that down. But I heard everything though. But some words I can't hear.
Okay. Okay, I'm gonna try.
Well, we
tell
can
me, just tell me. Yeah,
No.
if it gets really messed up, stop me and just tell me. I'm about done. Just give me like 3 more minutes. And then now, right? So we that very next day, right? Which was at open, and I do not. I will add something to the end of this. Look at this. Look at this. I mean, come on. We got in. Well, we got in. Look, you can't even sit in the show. We like on there. We ready up here. I mean, everything good?
No, I missed. You gotta go in and just go out. That's real quick. We'll wait for you.
All right, bet. Hold on. I'll be right back.
I had one out